And we are live. Hello, everybody, and welcome back. We are joined today by Yat, the chairman of Animoca Brands. He needs no introduction, and I'm really, really excited to get his take on Web3 broadly, Animoca Brands and their portfolio. Obviously, gaming, but it's not just about gaming in the show today. So we're also going to talk about digital assets and very much more. Yat, how are you doing today? Where are you coming to us from at this point in time?
Well, thank you for having me. First of all, it's a great pleasure to be here. And today I'm dialing in from Hong Kong, which is actually our headquarters. So glad to be here.
So actually in the home office for once. I know you to be probably the most traveled person in the whole of Web3. It's maybe you and Robbie vying for the most miles traveled over the course of a year. Have you been out?
Dubious honor. A dubious honor.
Well, I don't think it's a bad thing to be in the market. I think it's important to be talking to teams and projects. And again, that's something that you do probably better than most. But is it nice to be in Hong Kong and home for a little while?
It is, and I think it's also great just because family is here and everything like that as well. So it's not just about, although I've already sort of semi-empty nested, so I do see my kids around the world. But generally speaking, it's nice to be back in Hong Kong. This is where we built everything, and it's been my home for over 25 years.
Brilliant. Fantastic. And that's probably a great tee up to the introduction section, really, which is for those people who don't know you and who haven't come across Animoca above and beyond the headlines. Could you give us your brief story of your experience in Web3 and how Animoca was formed and how you got to where you are today?
Yeah, I mean, I think the history of how we got into and how we understood Web3 really started off, starting from my childhood, but I won't go there. I'll just quickly start in terms of sort of how we got into sort of generally the crypto sphere. And that was really with CryptoKitties, as with NFTs, right? Back in 2017, our studio in Vancouver called Fuel Powered was actually engaged and involved in helping build CryptoKitties back in the day. And one of our sort of guys who was leading that as essentially the head of that office, eventually became one of the co-founders of what would eventually become Dapper Labs, right? So that was kind of a very intimate beginning, you could say. But it's also interesting because we entered the sphere really because of NFTs. We didn't enter the sphere because of Bitcoin. So in that sense, I would say that we're different and have a differentiated approach to the whole sort of, why crypto, why Web3, why does it matter perspective, because we came in from that angle first. Initially, from the perspective of, what it does for gamers and gaming, because we were actually a gaming studio. We still are to an extent, but a gaming studio before. But eventually sort of saw what it could really mean for property rights, specifically digital property rights at large. And then the mission just became larger and bigger and more meaningful.
Got it. And again, I think the term NFT is probably, unfortunately or unfortunately, at this stage in the history of Web3 is a slightly tainted term. If you say, we were really big into NFTs back in the day, that will mean different things to different people. But ultimately, it means you saw the potential of digital assets. It started with IP. Right, you mentioned Dapper Labs.
Yes, correct. That's right. NBA Top Shots and so on. That's right. But also, back in the day when I say NFTs being at the peak of their hype cycle, it doesn't mean that they aren't relevant still. I mean, at the end of the day, NFTs still do about $500 million of sales a month. You know what I mean? And this is one of those funny things where if you're not in the space, you would say, oh, NFTs are dead or they don't exist, right? But actually, it does more sales than most things. And they actually are the ones in which we sort of symbolize a lot of our cultural capital. But what has changed, and this is why, for people who aren't paying attention might feel it's dead, is it's become more fragmented, meaning that the NFT space is now distributed not just on Ethereum, which used to be 99% of everything that was going on in the NFT space, which, by the way, this is one of the key reasons why Ethereum actually had such a price appreciation from our vantage point, right? When NFTs were sort of, not just popular, because it's not unpopular at the moment either, but the fact that they actually were 99% of the sort of NFT market was on Ethereum is part of the reason why Ethereum had so much value retention, which is not the case anymore, right? It's distributed in Solana and on ApeChain and now on Abstract, and then various L2s as well. So it's much more distributed, which is why Ethereum doesn't have center stage, even though it is the largest one. It is maybe the largest one by like 20 or 30%. It's not like 70 or 90%. That's the only difference.
Got it. So it's harder to follow. There's more places in which NFTs are being used. And to be clear, NFTs is no longer exclusively or limited to the domain of PFPs, digital art collections, the diversity of what an NFT represents today has got much, much broader. So
exactly, and I think it's going to
probably
get even broader over time. It's an innovation that that in a way has been dampened in large part because also the US has been hostile towards crypto for such a long time, and in NFTs were part of that target, so people wouldn't innovate around that, and then I think that's all changing.
100%. And again, I think we're moving away from we've kind of rebranded NFTs into real world assets, and real world assets kind of branched out into digital assets or tokenized assets. The reality is blockchains and tokens can be used for a very, very wide range of things right now. And if you're not paying attention, it's very easy to get lost. And the probably most recent cultural reference for NFTs is Bored Apes. And if you still believe that represents the entirety of the industry, this is the perfect show for you.
Absolutely. But I guess the other thing also is that for all the stuff that people say about Bored Apes, the floor price is still around 35 to 40,000 US dollars for a Bored Ape. So you know what? That's not too shabby. So
still a strong community. Let's build out the Animoca story, because again, as you mentioned, or as we talked about very briefly at the beginning, Animoca started in gaming. But what does your sphere of influence, sphere of activity, sphere of investment look like today? What's your investment thesis? What does the Animoca portfolio look like, including and beyond games today?
Yeah. So, I mean, I think in some ways we were, especially when we entered in the sort of, I guess, Web3 space, we expanded very quickly beyond gaming because we were very early in things like L1 and L2s, particularly L2s. Like, back in the day, I think we were most of the traffic of, what became Polygon used to be Matic, for instance, right? The reason we expanded into all these areas initially was because we're looking at ways in which you could expand this topic that we believe deeply in, which is digital property rights. And it started with this idea of gaming because, of course, gamers wanted to own their assets, or so was the thesis. But then we realized, wait, hold on, if you actually can own your digital property, beyond gaming, but in everything else, then what else could that mean in the form of tokenization? And so expanded into basically investing in anything that would be tokenizable, that could expand essentially digital property rights, which really means, in layman terms, is that if you can, if there's a real reason to tokenize it, then we're interested in taking a look at it, right? And this goes down to the broader thesis as to what does tokenization do. So we look at tokens and tokenization essentially as creation or expansion of network and network effects. And what that means is that when you tokenize anything, whether it is something like a meme coin even, or whether it's something that is virtual, that doesn't really exist physically, but exists virtually, let's say, for instance, like friendship or like communities or like some kind of network, right? What happens is when you tokenize that, you actually enumerate a value to it. It has a sense of sort of capital containment. And now, for the first time, I can actually measure a network effect. Whether it's a fleeting network effect, like it could be just 5 or 10 minutes, like some meme coins might just have a moment of glory for literally minutes, or maybe hours, sometimes days, but most of them just fade away. And then there's some of those that actually sort of last longer because they have stronger communities or bigger network effects or more purpose, whatever that may be, right? That is something we can now measure. And that's something we couldn't measure before. So that's kind of the base level. And you could say it's quite whimsical because not, if you look at the number of meme coins that are out there, there's really only a handful that matter and the rest of them don't. But many of them have had these short moments of glory, shall we say, because they represented these type of networks.
Or rather, those are the ones that have managed to sustain capital interests around them, that they matter. I mean, every one of them matter to somebody for a period of time. It's do they matter
Correct.
to enough people for long enough or consistently?
Correct. Yeah. And it's a way to measure the network effect and the strength of a network that previously we couldn't really do, and you couldn't do authentically. For instance, you could very easily fake your Instagram followers because you could just bot it. And nobody but Instagram may know whether this is real or not, personally. Right? So, however, today on blockchain, because of capital, the actual authenticity of the strength of a network is relevant because there's something at stake. There's real money behind it, and that's the power of it, right? If there's not real money behind it, then you can't really tell if it's real or not. Then you have to trust some authority to tell you that it's real or not. In the social network scene, that would be I trust Instagram or I trust TikTok to tell me the true stats. But that's why people bought it, because there's value inherent with it. It's worth saying to people, hey, I have 1 million followers, even if they're not real, because it gives you some kind of status or some kind of power or some kind of derivative way of making more money. And therefore, I would want to pretend to have that, right? Whereas blockchain sort of makes that real. So that's basically sort of the high level thesis as to why tokenization matters. And so we basically want to become essentially the company that helps tokenize the most important projects and is involved in the sort of, I guess, the deepest sort of areas of I guess, digital property rights, which is tokenization in everything, which you could basically say that, some ways that you could describe Animoca Brands as almost as a quasi-index of essentially the Web3 sort of token market, because we're so broadly engaged with over 570 portfolios and growing in what we believe are the most meaningful projects in the space. And just to add one more point around sort of the expansion of network effects, it's not just about creating new networks or a new asset that didn't exist before, like the network effects I described, but it's also about expanding networks. Like stablecoins are a great example, right? And we have our own with Standard Chartered, which is the Hong Kong licensed one, which is kind of interesting now because the US just passed the Genius Act, which basically means that we now have 2 territories that have essentially legal stablecoin bills, which means that there's going to be a lot more stables out there. But what does a stablecoin do? A stablecoin actually expands the network effect of the currency in question. Right? The fact that the US dollar is a stablecoin in the form of Circle and Tether and other stablecoins actually made the dollar more powerful and had a bigger network. And because of stablecoin and it's measured against that, there is no value increase, but it's undeniable that its network impact is larger and more powerful because of it, right? And the same is true if you turn it into an RWA. If you basically tokenize something like, like the Stradivarius violin, for instance, that we did a little while ago, just sort of as experiment, or if you tokenize a piece of art or whatever that is, what you're really doing is you're expanding the network and you're creating more of a community, you're creating a deeper network in a digital realm without borders, right? So again, it's really sort of expanding the network properties and the network value already inherent in an asset, just amplified now through tokenization.
Really great explanation. I'm going to double click on some of those points because I think there's a lot to unpick. Even in that small segment right there, there's a huge amount of interesting things. I mean, thing one is 570 companies in the portfolio, or 570 investments or projects. It's 573 projects in the portfolio. I remember when it was about 20, and they were all games, and some of them looked like great fun. Some of them were, again, it looked a little bit like the PS4 online store. As like, if you're an Animoca, you can play any one of the 20 games that have tokenized assets, and that's your options. How do you break down those 573? Because you've mentioned stables, you've mentioned meme coins, you've mentioned real world assets, you've mentioned gaming. For those people again who are maybe less familiar, what are the kind of categories of projects that you guys look at?
I mean, we have so many categories because as I said broadly, it's sort of trying to index basically the space, but. Gaming is, of course, one of the largest ones just because of our history. Of the 573, over 160 of them are in gaming. And, the metric that we look at is what can help sort of get to the fastest form of adoption in digital property rights, and, of course, most meaningful impact. Right? So what that means is that, gaming still makes sense because, something like 60 to 70% of the world is gaming. And they already engage in a form of virtual experience. A virtual currency isn't a far stretch from a token, and a skin isn't a far stretch from an NFT, right? Conceptually speaking. So it's more natural for them. And particularly when you look at adoption rates in Asia, it's been much better than it's been in the West, which we can go into maybe later. But really, that has been a big helper and driver in terms of the growth of that space. And let's not forget, back in, when the metaverse was sort of the hottest thing ever, back in 21 and 22, actually, most of the people who joined essentially the Web3 and I guess crypto asset class at that moment in time wasn't because they wanted to buy Bitcoin. That was sort of a narrative before, and is kind of the narrative today again. It was because they wanted to buy virtual land and sandbox. They wanted to have sand tokens, and they wanted to have gaming assets, right? So again, these things will come in cycles, but the point being that they were very easy for people to sort of imagine. Right. And it's almost like, thinking of what would be the most, because, Web3 does have a little bit of an adoption problem in terms of its sort of user interface design. And I don't mean, in this case, user interface to me in Web3 isn't the interface of a MetaMask. It's really sort of the why that's so difficult for people to understand, because it's virtual, right? They don't even understand how intellectual property rights works. Never mind how to deal with something like that's like an NFT, right? So they struggle with that. So what's the most skeuomorphic design aspect, shall we say, of a sort of Web 2 construct that we can move into Web 3? And that's kind of why gaming is important, because it's so much easier for someone in gaming to at least principally understand why Web 3 matters, right? But we've expanded into education, into deepen, of course, AI, right? Infrastructure, and we even and again, we look at what drives adoption. Like the most recent one that was just announced yesterday was our participation and support in sort of DDC, which is a Nasdaq listed sort of Bitcoin MicroStrategy type play. Having just raised $500 million, which we were part of, to basically really build a Bitcoin treasury. And you might say, oh, not another one, right? But the other thing is, say, there's never enough places to buy Bitcoin at a reasonable price, right? And if you want to tell a story, because what we notice is that, if you go tell a story about here you can buy Bitcoin to this listed company, once you basically have that proxy and you see that it's a levered play, then you go, okay, now I'm interested in this asset. And then from there you go, okay, I'm interested in Bitcoin. What else could I be looking at? Oh, there's another altcoin, or there's something else. So you begin that journey. It's not like sort of just one way. There's multiple ways to get there. We try to sort of address all of these. And so some of the projects that we really like in this space are those that really sort of break the mold and really sort of take advantage of what sort of crypto is really good at. So our joint venture with Standard Chartered, which is which is one of the biggest banks in our region, to launch a stablecoin, which licensed by the HKMA, is another one of those examples. Which like, why is Animoca doing stablecoins? Well, I mean, think about mass adoption. It's probably no better way of creating that kind of mass adoption than to do it through a stablecoin. But the key thing about this stablecoin is that it's not just a Hong Kong dollar stablecoin, which is originally launched, but because it's licensed by the HKMA, has the potential to open up a renminbi stablecoin. And now that's actually really interesting, because of course the whole world's talking US dollars. Well, what's the actual other major important currency in the world? It's not the euro, it's a renminbi, right? And Hong Kong basically clears something like 2 trillion renminbi a day, right? So you can kind of see why all of this starts to become relevant and important. But it's broad, basically. It's not specifically focused on sort of one or two verticals. Because the other thing about Web3, and this is a really key part about our thesis as well, is that we believe in this thing called the shared network effect. And it's this idea, this stemmed a little bit from our open source background and open source thinking, that it's not possible to have monopolies in Web3 because of the permissionless nature of crypto. So if Bitcoin does really well, that's great for everyone, because value will sort of trickle through to the rest of the ecosystem, quite literally.
Yeah. You can have disproportionate influence because of the effect of capital. I think the open ecosystem does mean that those with more capital than others have an unfair advantage. Those with more stake than others have an unfair advantage. But I totally take your point. It's not completely fair, but I agree. It is near impossible to create a monopoly.
And just to be clear, this isn't about fairness, right? Yeah. So I think it is about opportunity, yes, but this isn't about fairness, but it is about opportunity. So meaning that I can entice someone to collateralize his Bitcoin to go buy another token somewhere else in a completely free and open market, right? And I can go to someone who's made a lot of money on Solana, and I can ask him to bridge assets over, and there's no gates, no walls, nothing to prevent you from doing so. And I can create compelling use cases for broad audiences, which we've seen, right? So, I mean, if you look at the launches of all the L2s as an example, right, in that would be almost unthinkable to consider in the Web2 world, where I can literally just sort of, basically use the network that was in Facebook to create another kind of mini Facebook and business that might actually potentially become bigger, or maybe at least become very meaningful. That's just not possible in the Web2 frame because of the permission nature. So permissionlessness allows for that opportunity to construct and build from that. And that's why if you believe in that, which we do, then you can't really sort of concentrate your power in one, right? And if you believe that there's something that will really grow the space, then it literally is sort of rising tide lifts all boats, which is why when the industry does well, our entire index of companies does well, our entire portfolio and our entire token positions does well. And it's, we're broadly aligned. So, to the space.
So a very, very wide portfolio. I like the, we are the equivalent of an ETF of the entire industry, or we try to put ourselves in every place where digital assets make sense. Are there any investments or any categories that you have chosen not to invest in, or any that you've looked at and said, no, we won't do that. We won't go there.
Well, we're not going into porn. Okay.
Fair.
And we're not going into gambling directly. So those are categories that we stay away from. And by the way, this is not a judgment against. It's not against a judgment against those industries. Like we're not trying to be holier than thou and that kind of stuff, right? Like if you're into that stuff, then you're totally into that stuff. That's not the issue for us. It's more around the fact that these are areas that we're, one, not familiar with, first of all, and two, I would say also that we are a public company, right? And so if we relist our business, it's kind of harder to do that when you're in those categories as well. So there is a little bit of that. We work with governments, we advise governments, we have licensed stablecoins. So there's certain kind of areas that's kind of hard for us to be in. So we intentionally stay away from that. So those would be the type of things we just simply won't touch.
Got it. Understood. Those areas that are more sensitive, or from a reputational perspective, very, very clear. But then
regulatory as well.
Yeah. Outside of that, then actually, it is your business to try to create a position or understanding, or bring your disproportionate experience into almost any area where digital assets are being deployed.
Yes, and it's also about expanding the space. For instance, one of the things that we started to develop a thesis on earlier on, which I think has come somewhat to bear, is that the spaces, what's lacking in this space is financial literacy to grow the Web3 space. So if you're in Web3, you become financially literate, or you are already financially literate. But if you're not in Web3, actually, the likelihood of you not being financially literate is much higher, right? And so how do you get people to become financially literate? It's around basically introducing sort of the value of money and sort of capital formation and capital assets and capitalism broadly into the kind of assets or experiences that you as an individual value, right? So my mother is a musician, and she couldn't really care less about Bitcoin, frankly speaking, even though maybe many people on the show would say, but it's the best investment asset. But she doesn't care about investment assets because it's not her thing, right? Or the same is true for, whether it's a Tesla stock or whether it's some energy company, right? However, if you tokenize something like a Stradivarius, in her mind, it's like, oh, wait, I understand that. That's valuable. What does that mean? And then that's the journey in which she as a person would actually get into the world of money and finance and eventually into Web3, because it's something that she's interested and passionate about. And that's actually when you think about learning. I mean, it seems obvious when which is that you learn better things that you're passionate about than if you're not. I mean, it's like when you go to school, how many times have you just tuned out because you're like, what the hell am I doing here? And then there's a topic that was really interesting, and you're basically just there and ready for it. And so if you introduce, this is a powerful thing about tokenization and Web3, is once you tokenize any topic like that, you basically infuse it with capital formation and capitalism and money. And so it's a natural element in which we learn about money because of that. And we saw this, for instance, what happened in the Philippines with things like Axie Infinity, one of our first star portfolios, right? Where, a lot of people are like, oh, look at everything happened in the Philippines. Of course, what they didn't pay attention to, which is today, Philippines is one of the most crypto-friendly nations in the world. Why? Because of Axie, because all of those villagers in the Philippines who had no bank account suddenly had a banking platform through a crypto wallet, started to learn about the world of money through essentially crypto, became financially more literate, and now it's become a platform and it's completely changed the lives of millions of people in the Philippines.
And you've also introduced the concept of remote working arbitrage, right? Saying, well, if I can earn $5 an hour by engaging in some digital media as opposed to earning $3 an hour doing something locally, I'm going to do that because it serves me better. Now, obviously, long term, you've got to figure out, is that going to be that way forever? Or, do I become a professional gamer at this point at age 85, living in the Philippines, whatever it is? But again, that introduces, this is really interesting because it gets quite big when you get into this territory, right? At that point, you're introducing the concept of remote working. You're talking about introducing the concept of financial literacy and also spreading the idea of capitalism. These are very, very big things. These are really, really big topics for any one organization to be taking on as mission. right?
Yeah, but we believe in that strongly. And, I think one of the reasons why this is so attractive as well is that, we actually think that Web3 actually is a solution towards helping people get introduced to capitalism, because Web3 is capitalist. App is completely capitalist, right? And I think one of the reasons why so many people who are sort of fearful of crypto and blockchain in particular is because they're actually fearful of capitalism, right? Which we have a problem in the world with. But I think it's not about the fact that they dislike capitalism, because at the end of the day, if they were offered more money, they'd be like, oh, sure, why not? It's they don't understand it, right?
Yeah, it's not
and I think that's
maybe more just reticent because of a lack of experience or fear of stepping into something that they don't have the understanding or the experience of. I mean, financial literacy is at an all-time low in most places, whether you could call that as deliberate or not. The challenge is the education systems, the corporate systems around the world don't.
Yeah, it's also that's right. That's right. I mean, if you can teach our kids algebra, you can certainly teach them compound interest, for instance, right? It's pretty straightforward. But I would say also
thing, right? So tell a kid age 8, okay, do you want to be a millionaire one day? Okay, cool. Here's a compound interest model. Here's how much capital you need to put in by which age to get to $1 million. Do you want to be a millionaire by the time you're 30? You need $200 a month. And they're like, oh, that's interesting. I wonder how I could do that.
But I think the problem is that in many societies, first of all, I agree with you on this one wholeheartedly. But you first need to be in a society that has a relationship with money that is not unhealthy. And I grew up in Europe, so going a little back on my background, why is Web3 so fascinating for me, and why I think it's sort of the calling of the company and somewhat for myself, is because when I grew up in Europe in the 70s and 80s, so I'm totally dating myself at this point, right? And I've already a kid who's working, so I've been around the block. I grew up in Europe at a time when we still had Eastern Europe. The Iron Curtain was still there, and my mom used to work at the eastern side of Berlin at the Komische Oper, which basically was as communist as it gets. So I grew up in a socially democratic country which embraced, let's call it, a tamed version of capitalism, and moved and saw my mom, basically at the communist side, which was like to me like, what the hell is this, right? And then afterwards, I went to America for work, and which was like, like everyone talks about money at the time, especially in sort of the late 80s, 90s. And I came to Hong Kong, which is Milton Friedman's wet dream, because we didn't even have Social Security at the time, right? It was literally like, but to that extent, you would also see the flip side of that, right? So you'd have a lot of social protection in a place like Europe. And then you go to Hong Kong, which has improved, but still has an issue, where you literally have elderly people basically carrying trash, right? Because there's no other means, right? So you have you have sort of the extremes around that. But in Europe, I couldn't talk about money. And, talking about money was kind of rude. And in a dinner table conversation, you would not talk about the price of real estate or your assets or your stock, let alone your crypto, right? Most people in the room would look at you and say, what the hell, who invited this guy, right? But if you're in Hong Kong, and I presume New York or London might be similar, it's quite common to say, hey, I looked at this place and that was the cost of the real estate. Hey, look at the stock market. Like, the most shocking thing I experienced when I first came to Hong Kong, and I took this sort of the train up to Sha Tin, which is one of the places where they have the horse races, which is one of the legalized gambling forms in Hong Kong with the Hong Kong Jockey Club. And I saw a dad teaching his child, who was maybe, I don't know, 6 or 7 or like a young age, how to bet on horses. Okay. So the European in me at the time was like, what is he doing? Okay. He's corrupting his young mind, teaching him about gambling. But, the current me is like, okay, he's teaching him how to do risk from his perspective. And sure, I mean, and it's not life savings or something. It was fun. It was everything. And this is also the thing in Hong Kong, for those of you who know the space, you go to certain districts, you would hear essentially sort of the clashing of these mahjong, basically marbles, which is kind of like I think of it as a Chinese version of poker, right?
I've played mahjong since I was a kid. It's one of the coolest games anybody can learn. It's tactile, it is sensory, it is fun, it's colorful, it's complicated, but also kind of easy. Anybody out there who isn't playing mahjong, go check it out. Would recommend.
And it's about and there's money involved, right? Even if it's just play money, right? And it's fun, right? Because of the money, right? And so in some way, and in some ways, that sort of setup teaches you and it gives you a relationship with money. And frankly, I think it's also the reason why places like Hong Kong are much better at crypto adoption, because they're much more comfortable with money, right? Whereas I think the closest thing we teach about money with our kids in school, I mean, during early education, is probably playing Monopoly, which is the wrong idea about money. So unfortunately,
well, it teaches you that real estate is a good part of any portfolio, but it's not quite fair. And,
yeah, I know. And also, at the end of the day, it's winner takes all, which is also the other issue. Yeah,
exactly. It doesn't have to be a zero-sum game. It can be and, not or. That got deep. That got deep for a minute there. Yeah, we went down a very, very deep rabbit hole. And for those people listening in, I hope that was kind of an interesting sidebar for you, because it certainly was for me. And I mean, everybody has their own view on the philosophy behind why they're in Web3 or why they're working in Web3. But I think that's one of the most wholesome versions that I've heard. But actually, it's deeply ingrained, and you'll find people are drawn to Web3 because of their backgrounds. People from Eastern Europe, there's huge Russian, Ukrainian, Bulgarian population, Romanian populations in Web3 who grew up in the exact environment that you talk about now. And it's still, to some extent, that way. The kind of Southeast Asia corner of Web3 is exactly here for the opportunities. The X to earn aspect, which working in VeChain is very close to my heart. The people looking at new financial opportunities through digital and gaming is something that the developing nations are all about, and that spreads like wildfire. It's in Central and Southern Africa at the same time. We're creating opportunities through new ways of capitalism or for new ways of earning. That it's not necessarily the traditional view of how to earn money, but if it is creating value, if you are sharing that value, if you're receiving that value, what's to say what's good or bad, as long as you're doing well for yourself?
Well, I think the other thing, of course, is that what we've done society a disservice, because we live broadly in a capitalist society, whether we like it or not. I mean, as much as Europe, for instance, would like to sort of take the view of having tamed capitalism, it's also the reason why it's doing poorer than most other places, relatively speaking, for its framework. It's one of those. It's one of those things that we live in a capitalist world, and yet most of us are still stuck with this labor theory of value. Meaning that, and don't get me wrong, working well and good is important. So I think the dignity in work and the dignity in labor is important. But if you don't invest your capital, which is kind of what you do as a capitalist, then you're not hedged against inflation. And so how many people still believe that that money is a store of value, which has long since been betrayed, right? And again, if you don't understand that construct, then you are taken advantage of the whole time. And I think this is the point about sort of the lack of financial literacy and the lack of the ability or maybe the willingness to invest or manage risk in a certain way because you're told that wasn't good or that was sort of negative, right? So I think we have to bring more people into the sort of the capitalist framework to understand that they have to invest in something, right? I mean, even if it's not crypto, you have to invest in something to hedge yourself against it, because you can't expect that work alone is going to do it for you, which is the issue, right? The labor economies and people in the labor markets have had their real money income broadly decline over the last couple of decades, while everyone who's invested actually has broadly done better. And that's where you have this big gap. So the labor class is the one that's been left behind, and it's a capital class, which is still a single-digit percentage, that has actually really sort of achieved these kind of outsized returns. And you don't have to look so far because, and again, one of the reasons why in Asia it's been so much more widely adopted. Most people might not realize that 40 years ago, South Korea's GDP was lower than North Korea, right? And today it's the 12th largest economy in the world. And unlike North Korea, it didn't have natural resources, right? And so when you think about it, South Korea is a great example, which, by the way, is the most active crypto trading market in the world now, right? For many other reasons as well.
South Korea or North Korea?
South Korea, of course, right? Although there's an interesting correlation between North Korea's interest in crypto as well, for all the wrong reasons. But yes,
I mean, the guys up north are holding some bags. I'm not going to lie, or at least they allegedly hold some bags.
Yes, allegedly holding some bags that they've obtained in some alleged unseemly ways. But anyway, but the reason is because in living memory, people in South Korea have lived at a time when it was a military dictatorship, when they didn't have property rights. And the property rights that really propelled South Korea was intellectual property rights, right? It was things like gaming, K-pop, K-drama, creative industries, essentially things that, the critics in the space would say, but they own, it's virtual. It's not real, right? IP and trademarks and so on are not real. I was in Asia when the Asia economic crisis hit and Korea was really devastated. And the one thing that Korea decided to do out of the budget that from the bailout budget from the IMF was to spend $200 million on broadband. And everyone was around saying, what the hell are you guys doing here? You know, instead of sort of trying to sort of have ways for people to feed, so to speak, and sort of these type of resources, you're building it on broadband, right? And something virtual, like, you know, internet type of stuff. And it's because of that Korea had a leg up compared to almost any other nation in its broadband infrastructure, and created this incredible boom of perhaps one of the most sort of creative powerhouses in the world in the form of these intellectual property rights. And of course, most people also who are not in the IP space don't appreciate that the combined value of all IP assets, according to WIPO anyway, which is like trademarks and some sort of patents and so forth, actually is roughly 12 to 18 times the market value of gold.
You'll get no challenge from me. I was in Japan last week in Osaka, but I've been to Japan, into Tokyo and a few other cities as well. You go anywhere in Japan and you see the influence of Bandai Namco, the popular culture figures, Gundam, and anime. Take your pick as to which one. It is everywhere. It is every day. It is in your face. It is games. It's content. And you tell me people aren't investing their time and money against those as the kind of cornerstones of their cultural experience. It is everywhere. It's maybe not as pervasive in Europe, for sure. It's very different. But certainly in Japan, it is almost like a cultural identity as to which of these particular IPs you form interest in or spend your time on, or which you game with. It is wild how significant, how pervasive it is. And so you get absolutely zero challenge from me. And if those things are valuable in Japan or valuable in Korea, or take your pick, then the opportunity for those to expand out into other nations of other groups of people who have similar interest, or who value Japanese culture, or who have grown up not seeing that, right? You take a kid from East Germany and you go put him in Tokyo. My God, you know, the wide-eyed moment of what the hell have I just walked into? You know, the kid would probably never sleep. It is value on value on value. So no challenge from me there. Now, yeah, I know you're not allowed to have favorites, but maybe I'd love to illustrate with a couple of examples of portfolio companies that you guys have been particularly successful with, or that you see growing particularly strongly at this point in time. Again, just to illustrate maybe some of the ways that you're investing and what is capturing the imagination of both kind of investors and developers and users today. Again, no favorites, but which would be the examples you might choose to share?
Yeah, so yeah, exactly. It's like picking your favorite child, right? So maybe let me just sort of highlight a few that we do really think creating an impact. And so the one that obviously we talk about a lot is digital identity with Mochaverse. That's a pretty big one. But it's not just because of digital identity, because I think there's a lot of people who are trying to solve, you know, sort of digital identity in one form or the other, and that's all relevant.
There are a billion self-sovereign digital identity wallets in the world today, and I do not know how any of them make any money. It is the easiest. It appears to be one of the easiest projects to start up and get funding for, and yet there's still ridiculous amounts of fragmentation. Why has nobody won, or what is Mochaverse doing differently?
Well, so and I think the key that's different around what Mochaverse is trying to do is it's building a reputation network and a reputation framework. So digital identity really as a reputation layer. And we like that a lot because we believe that the most valuable, in the construct of currencies, shall we say, the most valuable thing that we have as a currency is our reputation. And so the framework to think about sort of Mochaverse is its tokenized reputation, wrapped in the form of a digital identity, because the digital identity is the container of your reputation, but it is not actually, let's say, the currency in and of itself, right? So what's powerful and how it sort of started is because of all the airdrop farming that was going out there. And again, there's nothing wrong with being enterprising, but there's an issue when you're trying to build a network when 90% of your customers aren't real customers, right? And that was kind of how it started. But you know, from that lens, it started to sort of develop a system to say, okay, so you're that kind of user, you have this kind of reputation. Might I give you a bigger airdrop because of the fact that you have a good reputation and you're doing more, as opposed to just how much money do I have and how much, because as we also know, just because you have a lot of money or can prove a lot of assets, it might make you a desirable target, but that doesn't mean that you're loyal or good or act in a certain manner for a certain type of project, right?
It's one data point that you can take to then make an evaluation. But if you have multiple data points, segmentation becomes much more impactful.
Correct. And so what Mochaverse is building is essentially the reputation layer, and starting with its own, but essentially now branching it out to third parties like SK Telecom, for instance, with SK Planet, which is the largest sort of, I guess, Korean telco and largest Korean loyalty network, as a way for you to basically sort of expand and grow basically digital identity frameworks that have a reputation layer that then becomes portable and can be used elsewhere as well. And others can essentially leverage the reputation that they gained over time. Now, this is relevant because, for instance, you could have a great Amazon seller rating in Web 2, and it's only good in Amazon. I can't take it to somewhere else. I can't use it on eBay, or I can't even use it on Facebook to say, hey, you know what? I have a really good seller rating on Amazon. You should give me some street cred here on Instagram. Okay,
or
right?
It's hard to coalesce that unless again, it's very, very deliberately proprietary, but it could actually be something that could be weaved into the Mochaverse, right?
Well, the point is it's your asset as opposed to someone else's asset. Because right now, your reputation, let's say on Instagram, you have 1 million followers and you have gazillion likes. That's your reputation, but it's on Instagram. And who owns that reputation? Not really you. If you left Instagram, actually, you lose everything, right? And that's really how they keep you. But imagine if I could, I don't take my 1 million followers, but I take my reputation, which means that if I start in another network, as another group, you start with immediate kudos, or at least the relevance of saying, hey, I'm someone on Instagram, or I'm someone on Amazon, take me more seriously, which is how it works in real life, right? Like when you show up and you're recommended by others, then people will pay more attention to you, and it gives and accrues value to your reputation as an individual. And it's also the one thing that you will do to defend with money, which is the other thing right now. In a way, this sort of hyper anonymity. And again, I'm not against privacy. We're very pro privacy. But it's just that if you're hyper anonymous, you're actually creating a framework where you can't build trust, right? Like,
you can be non-doxed and still have a high reputational score that can be passed by an algorithm.
Exactly. And the algorithm, and in this case, the reputation, can also test someone. Just like in real life, for instance, if I give you a recommendation of someone and that person ended up doing something great, my reputation increases together with the other person. But if I give you a reputation of someone who's poor, then my reputation declines as well. And I'm not insulated from that. And that's basically what Mochaverse is building from a reputation stack. And we think that's very exciting because nobody else is trying to solve essentially digital identity in this manner. And ZK proofs provide a really good way in which you can preserve your anonymity, but basically still reveal your reputation, right? And of course, the whole
argument for me there. Spending 2 years at midnight. I think those in the Web3 bubble probably underappreciate how much transparency there is and how much of a problem that is for the rest of the world looking in. For ourselves, people who work in Web3, their risk tolerance is on a very, very different steroid-induced level than everybody else on the planet. It's like, look, if I lose it all, I don't care. I'll make it back. But you go to any ISO anywhere else and saying you're going to put all of my corporate data, my transactions, my interactions, the value of those interactions on a public record. No.
And so
we'll get there.
Yeah, but let me sort of open up another angle here, which is that I think while I agree with you, I think for those who are sort of very happy about their anonymity, again, this does not touch on your anonymity. It just reveals your reputation. And there might be some who don't want that, because they're making money essentially on the arbitrage of the lack of a reputation system, which is, by the way, what happened in the advertising industry with things like click fraud, right? Where you didn't know who the customer was. Someone just pretended they kept clicking on it as if you had a lot of views on a website or a lot of clicks, but in reality, it never generated revenue, and it was bad for all parties involved, right? So we have to have a way sort of have a way to deal with that, right? So there's a lot of sort of benefits towards essentially having a framework like this, and of course the holy grail that ends up opening up, which is the bigger part of all this, is unsecured credit, right? So unsecured credit. Everything in Web3 is over collateralized for a reason, because I can't trust you as an individual because I don't know who you are. So show me your assets and stake them, so then I can at least do business with you, and I'll collateralize it by, I don't know, 50% to 70%, right? Now, that's not how real life actually works. And that's not how you scale it. Like, it's not just because I get unsecured credit. Everything we do, in a way, is unsecured credit in terms of sort of our risk relationship angle. For instance, if I hired a person and I want to pay him a salary, why do I hire him hot? On his reputation, which is why he has a university degree or not, or he has worked in his company, he has these referrals. So I get some evidence of his reputation, and I'm giving this person credit by paying him in advance for work he has yet to deliver. That's unsecured credit, right? Now, in the Web3 parallel, that would be like, oh, I don't trust you. I don't know who you are. Your reputation doesn't matter to me. Please deposit $1 million and I'll pay you basically a salary equal to that money back over time. Like, that doesn't make sense, okay, right? And so you can't open credit markets as well, which is essentially how the world runs. So if you want to basically expand the Web3 space, and this comes from the lens of what could be really big ideas that could change that, that would be something like, how do we open up unsecured credit markets, that are reputation based in Web3? That's kind of what Mochaverse is trying to do. Then, okay, now we see a reason why we want to sort of back money against that, right? So that's one example, and it kind of gives you a scale of what we're thinking of, because unsecured credit market is trillions of dollars, right? Now, on that note, there's another one that we like a lot, which is on-chain student loans that we're doing with Open Campus. And recently we backed Pencil Finance to do that. And why is that so relevant? Similarly here, it's unsecured credit, but in this case, it's students who need student loans in places like the Philippines and so on. Using all the things that blockchain can do, which is better, faster, cheaper, in terms of essentially the sort of financing and yield and therefore lower interest, allows a student to be onboarded with crypto, gets paid in crypto, has to repay in crypto, which means they immediately become onboarded into that world. That's number one.
You're already giving them financial literacy 101.
And you're already giving them financial literacy.
Is there a crypto learn to earn aspect of this here? Which
pretty much
you answered the question before you got there, so yes.
Exactly. But also, because now you could have an ID, Mocha ID, you could basically start sort of, earning essentially virtual work, which can pay down essentially your interest. Like, this whole cycle starts to work really well, even though it's a company we invested in, or built on the EDU chain. But you can see essentially how that could sort of evolve and grow from there. And of course, the other holy grail here is that you've got something like $3.3 trillion in student loans today in the world. And if you took just 10% of that on chain, because it's better, faster, cheaper, you basically already triple to quadruple on-chain TVL globally today, right? So again, these are sort of goals that are worth going after as an example of things. And of course, why are we doing a stablecoin with Standard Chartered? Because essentially it greases all these rails in terms of, okay, where do I get my cash? How do I sort of onboard it? That kind of stuff around those areas. And how do we create mass adoptions to millions of students around the world, or millions of people, generally speaking, right? So those are examples of these type of projects. But we're also very, very bullish on gaming, right? Because it's still the largest on-chain activity is still in gaming, right? It's not actually in many people talk about, oh, look at AI tokens, and yeah, they're very important. But the number of people who play Web3 games is like 7 to 8 million daily actives right now, which is larger than anything else combined. But a lot of people measure tokens and activity and try to sort of trade correlation between them, which is not the case, because your investor interest in a token doesn't necessarily correlate to the user activity in a game.
Yes, it's an interesting one, because you've got created that financialization where people can go and buy those tokens in the anticipation that users will want them, versus actually getting them and earning them and those having value, and you being able to do something with that value elsewhere. It's an interest. It's like it's more of a market than it used to be. I mean, if we think about
it's a better market, I would argue. I think it's 100%. a better market, and I think it's one important sort of understanding, and the way that we think about Web3 gaming is that it's created a new kind of gamer in your game that isn't the way. So meaning that you could be a gamer who loves to play games, and you could now have a participant as a token holder who is essentially still part of your game, but not necessarily playing the game. So the Venn diagram of people who are owning the token and who are playing the game isn't one-to-one. Far from it, right?
I'll give you an analogy for this one. There are some people who play FIFA Ultimate Team. It's a game where you play football matches and you win or you lose, right? And you rank up your teams based on that. But there is a market within the FIFA Ultimate Team game, which is where you buy and trade players. And if you buy them at a low price and you sell them at a high price, you collect cash, and you can use that cash to level up your team, and rather than playing games. So you can gain XP from gaming, or you can gain cash from trading. And there is a subsection of the community who only play for the trading, because it's a football game that has actually a really realistic trading simulator, or a trading simulator that actually has real world players. And because of the associational love of the sport, the people are kind of into that, or it's kind of interesting.
Yeah.
This is that, but open and with real money.
Yep. Now, I think this is the other thing that when you talk about the ones who are participating as an investor, where tokens become very powerful, sort of, I guess, ways to expand the networks of them, is that the token pricing is very, very sensitive towards macro sentiment of an industry. So meaning that the way we look at token pricing, especially if they're fair and open, because not all of them are fair and open, just to be clear, right? Some of them are heavily manipulated. Take those aside, right? When tokens are in circulation in the market in a fairly sort of transparent and open way, to us, they become market indicators of interest, much like the stock market, much like commodities, and in a way is like an open poly market, right? So that means that when AI is hot, then all AI tokens do well, regardless of whether they have sort of higher utility than gaming. They're uncorrelated to each other. And what I think a lot of people misunderstood about gaming is that even though gaming has grown from a utility standpoint, the investor sentiment in gaming has been negative, because gaming has been negative over the last 3 years as a macro. Like people thought that post-COVID, which was the peak of gaming for all the reasons that make sense, that people thought, okay, post-COVID, we're still going to game like crazy. Well, a couple of things happened. One, it actually stayed flat. So that wasn't negative, but it wasn't also positive. But there's two major issues in the gaming world that continue to sort of exacerbate over the same period of time. One, the cost of gaming is broadly the same as it was actually 10 years ago even, which means that in real money terms, gaming companies make less money because they're charging you the same for the game as they did before the money printer went crazy, right? So that's one, right? And so your cost of labor is up, the cost of milk is up, but your cost of selling the game is not. So you're making less money in real money terms, which is why gaming companies have been laying off and cutting costs and all that kind of stuff. And so the whole sentiment has been negative. So it's not just in token prices, it's share prices, it's all these things, broadly speaking, have been sort of, struggling, relatively speaking. Like, when you think about a company like Roblox, which is the biggest gaming company in the world, 380 million daily active users, monthly active users. I mean, an insane number, okay? 380 million, right? If that was a social media network, right, it would have a market cap that would be, hundreds of billions of dollars. I think its market cap is like 50 or 60 billion dollars on huge cash flow profits, right? And again, why is that the case? Because gaming sentiment broadly is negative, not actually the fundamentals of the business in and of itself, right?
Gotcha. United States population is about 340 million people. So you basically have the entire population of America. Well, in reality, for Roblox, it's probably a very large proportion of that.
It is exactly. Still, right?
That's a very large number of people.
Exactly. And but if it was a social network of that size and scale, it would have a completely different sort of market value, for example, right? So that's kind of one of the negative indicators. And then the other, but that will change, of course. I think now with Nintendo Switch pushing the pricing, and of course we think GTA 6 will come as well next year, delayed again, but next year. And I think that's going to be a big boost to the gaming industry. So sentiment will improve as well. And so I think that's a part of that, which means that we also think that the better opportunities are going to be in buying Web3 tokens that are of games that are in the market. So that's the other opportunity in crypto, which is that it's not only about the new games that are out there. It's about, hey, what are the games that are actually good games that are undervalued? Because quite a few of those have token prices that are below the token prices that they raise money at, but they're still good games, or they make profit. And so you can see that there's opportunity in that area. So just to be clear, at Animoca, we're not just doing private deals. We're very much active in the liquid markets, and we think sort of liquid markets and gaming are a better short-term, mid-term opportunity when we think the gaming meta will improve because broadly speaking, it's still a growth category, and will outperform maybe closer to earlier next year when GTA comes out. But that's kind of the thesis around it. So we've been actually buying sort of liquid tokens in the market as well. Some of them which we've announced, and some of them, of course, which we haven't. But yes.
Very interesting. And we're coming towards the end of the discussion. Yeah. And thank you again for every time I hear you speak, I learn something interesting, or I hear a different perspective. And we've gone from philosophy to markets to education to how to run a VC or equivalent of a VC. To close the show, I'd love to maybe just kind of bring it back to how to think about the broadly digital assets or digitized IP opportunity in the coming months. Clearly, the macro picture will change some of it, right? Whether crypto is up or down, whether gaming is up or down, whether AI is up or down, projects in those categories will grow. But what else could you advise people when they're thinking about building projects or investing their own time? Let's not talk about investing their own money, but at least in the space that you're working in and the projects that you find interest in, how would you advise people to think about Web3, digital IP, tokenized projects, gaming for the months ahead?
So, I mean, I guess it depends which lens you're taking, right? But I would say, from my perspective, I can't think of a more relevant, bigger opportunity than, broadly speaking, the digital asset opportunity. And it comes from a couple of frameworks. One, do you believe we're going to be spending more time online? Well, if you do, then it kind of makes sense to sort of, delve in the asset class of that growth category. Like if you think of sort of digital as a nation or as a country, it's kind of like the new America, right? Uncharted.
Crypto is the asset class of the online community.
Exactly. And it's not just the asset class of the online community, it's the asset class of AI agents and agentic AI. So when you think about sort of the fact that AI agents are going to be transacting rapidly and quickly in things, what are they going to be doing so? They're going to be doing it, obviously, with crypto, because it's a native sort of digital asset. The other thing that's powerful about AI is, and speaking of things like digital reputation, is that eventually we're going to be following, if we're not already, essentially AI agents who have maybe better reputation because maybe they're better traders or better investors, and we'll park our money with them, or we'll follow their trades, or we might even be influenced by them because they'll pay us, because an AI agent can issue tokens of their own in the blockchain space, and they can pay you for that if there's market value and capital formation, which of course before they couldn't do, which means we're entering an age where the sort of agentic AI has true agency, right? So there's a couple of things that if you believe that path to be true, then, regardless of whether you own the AI or not, the currency and the asset class of that space is essentially digital assets, right? So there's nothing more important to me than that category for us let's call it as an investor class. Now, what the opportunity though is, and why we're so excited about this, is that to me, it's the broadest form of democratizing financial literacy to the masses. So when you think about the early days of the internet, it wasn't actually it was democratizing information, but the framework was really digital literacy. I remember, I had a small stint at AT&T, and this was in the 90s. God, that was a long time ago. I had to print my emails to my boss so that he could read them, because he treated an email like a fax machine, right? And the difference was that it was just his form of lack of digital literacy. But of course, we're now all quite digitally literate over time. There's, most of the world has digital literacy as a result of the internet. Because if you didn't have digital literacy, you couldn't partake in the internet and its opportunities. And we would have a totally different world if we weren't digitally literate, right? And so what is this new form of literacy that Web3 brings? It's not digital literacy, because we're kind of digital literate. It's financial literacy. It's the blending in. And it's not just, people talk about the democratization of access of money with Web3. That's kind of true. But what it really does is it democratizes financial literacy, because the tools that you could now partake in these new asset classes of both purpose and passion are things that you can now participate in and you could learn about. And so for someone who's like, oh, what should I do? Well, you probably can find a category, whether it's a game or PFP or an art piece or some RWA, or even something more boring like a stable coin or whatever it is, there's more and more likelihood over time that there's something for you, even if you're not in crypto or in Web3. There's something that you can sink your teeth in that space, and then start learning about sort of things that you love or care about, and in the process learn about money as a result, right? So I think that's really the opportunity, right? And how do we bring billions of people into financial literacy? To me, that's Web3. Digital property rights is obviously a framework, but it's kind of intellectual, right? You can't tell people, hey, digital property rights is how you're going to learn about money. That doesn't compete with it, even if we understand that capitalism and property rights are embedded intellectually. For most people, it doesn't mean anything, right? But essentially, through Web3, through tokenization, we'll learn about money. And that also means that the whole world will change from a liquidity perspective as well. Because this is the other thing. Like, think about all the people who are trading sort of generally, not even crypto, right? I think the global average index is under 10%. I think it's like 7.6%, right? That's an abysmally small figure if you think about it, right? For most of the world that's digitally online, so few still invest in one form or a fashion because they don't understand, right? And again, I think part of it has to do with the rails. Part of it has to do with the lack of financial literacy. But also think about when you make an investment, you have to KYC, you have to do all these things. You have to declare your income. If you don't make enough income, you're excluded from certain investment asset classes. Like, all these things make it impossible for you, or very hard for you, to actually invest. And Web3 does away with all of that. So this democratization, I think, is the growth of that asset class, that opportunity. And of course, if that happens, then you're going to have billions of new people that are going to own these type of digital assets, which therefore means that the value of these assets are going to sort of obviously increase, just like the population increases when you go to places like New York or Hong Kong or whatever, right? The demand and supply sort of rules all start to kick in.
There we go. And you thought Animoca Brands was just about gaming. Yeah, thank you so much for joining us today. A really interesting insight into your philosophy around Web3, the work and investments that you're making as Animoca Brands, and what that means for basically the world. Really, really interesting. Really looking forward to seeing some of those projects grow. Looking forward to seeing the portfolio grow. Looking forward to seeing gaming come back as a macro, AI come back as a macro, education come in as a macro. Have a great rest of your time in Hong Kong. Safe travels. Hope to see you out on the road sometime soon, and stay safe out there.
Thank you.